Good afternoon. It's yours truly, Greg Scott, founder and CEO of Financial Fit Club Incorporated, your #1 rated credit repair and finance company in the Hampton Roads area. Today we're going to talk about how you not having an emergency fund is affecting your credit. If you blow a tire, need an emergency car repair, have to purchase something for your kids, or miss a couple of days of work because of sickness or anything like that, people without emergency funds usually go out and swipe credit to handle the shortfall. So once you increase your credit card balances, once you go over that 30% threshold, your credit score starts to go down. You could possibly miss payments on other things you may owe on because you have to take care of this emergency as well, which could lead to late payments, what makes up 35% of your score. So not having an emergency fund is directly correlated to you having a high credit score. Build your emergency funds. Need help with your finances or your credit? Click the link in the bio or the bio of this post. Schedule a free consultation with us. And remember, get financially fit. Your legacy depends on it. Thank you.